All right, today I want to talk about my very least favorite topic, losses. And I want to give a sort of a simple example. At least it'll be simple to investors with quite a bit of experience. It might be actually new and even revelatory for people who do not have a lot of experience with investing. So I'm just going to share a hypothetical example of an investment portfolio of $100 in capital. And I'm going to walk through some different scenarios of losses and what is required to get back to even after experiencing a loss. So if you look at a hypothetical 10% loss on this $100 portfolio, your $100 in capital drops to $90. And then to get back to even, you actually have to have an 11% return to recover back to where you were before. So 100 dropping to 90 is a loss of 10%, but 90 going back to 100 is an 11% gain. It's 10 over 90. So this is actually slightly more difficult, not much, but a little bit more difficult to recoup that lost 10%. Now, if you think about this a little bit, you can see how this can magnify as the severity of the losses increases. And just for an example, imagine a 50% loss where your $100 portfolio drops from $100 to $50, so it gets cut in half. That's a 50% decline, but in order to make that back, you have to have a 100% gain. You've got to double your $50 in capital to get back to 100. And you can see that this spirals way out of control once you have even greater losses. So let's take a 75% loss. Your $100 portfolio drops to $25 in capital. Well, now you have to quadruple your money to get back to even. And four-baggers, those are hard to find in the investment firmament. You don't want to have getting back to even be predicated on finding four-baggers if you can avoid it. And then we'll take one more example. Imagine a 90% loss. So your $100 in capital drops by 90% to $10 in capital remaining. Well, now you have to 10-bag your capital just to get back to even. And honestly, 10-baggers, you can go your whole investment career and only find a few 10-baggers and in the course of an entire life investing. So you definitely don't want to have to be dependent on that in order to get back to even. So the bottom line here is obviously avoid catastrophic losses, which is easier said than done, but you want to sort of stay out of very high volatility stocks, keep extra cash balances, don't mess around with option strategy where you can wipe out your capital, and do your best to try to avoid catastrophic losses at all costs because they're really difficult to make back. As always, thanks for listening.